Right, let's look at SPY first, which was down 2.38% today. And last week, I drew this arrow that we would likely pull back for a higher low somewhere above 513. And we are sitting right around 513 as of today's close. And we're getting a very nice setup because if this is going to be the bottom and we've already set the bottom, then we are simply just looking for a higher low here. And anything above this low is a higher low. But if we're going to get the bullish move that I'm looking for, we really should just start pushing from here. We don't need to come any lower towards this lower support at 498 and 488. Now, if we get below 488, we are back in bear market territory and there's no telling how low we're going to go. So that is definitely the risk if you're bullish, is you are managing risk down towards the April 7th low and treating that as a bottom. If you are not bullish, that is completely fine. You are simply staying bearish below the danger zone, which is up here at SPY 544. If we break above 544 and get out of this downtrend, you are covering your shorts because that's a bull breakout, which means we're likely going a lot higher. So the bearish scenario is very simple to understand. You are simply just staying bearish below 544. In the bullish scenario, you need to manage risk very well right around 513, and then above that you're looking for a push higher towards 544 to retest the danger zone, and more importantly to fill this gap up here at 554. So 554 is where you're setting your reward if you're a bull. If you're a little more risk off, you can set it lower down in the 540s, and that is where your risk should be measured from. If you don't understand risk and reward, there is a video in the link of this description that will describe how you should be setting up your risk reward ratios, and you will need to learn how to do this properly if you want to be profitable, because you need to make sure as a trader you are making more money than you are losing, because you will never win 100% of your trades. So bearish below 544 is completely fine, but it is also completely fine to be bullish above 513. On the NASDAQ 100 triple Qs, we were down 2.47% today, and it's going to be very similar to SPY. You want to be looking to stay bullish, and this is going to be a zone between about 428 all the way up to about 432. In this zone, I am looking for a push all the way back higher towards 468. And that is the bullish scenario from here, because just like I'm talking about on SPY, you are looking for this higher low, treating April 7th as the bottom. And then coming off of the bottom, we're looking for a higher low before we continue to push higher. This higher push could go a lot higher than I'm talking about, but for a short-term minded trade, you are looking for a push into the 460s. Above 468, we will have the bull breakout to come all the way back up to retest the 490s, but we'll cross that bridge when the time comes. If you're staying bearish, you are simply staying bearish below the danger zone, which is anywhere between 456 and 460. Keep it that simple. If you want to be bullish or bearish, that's up to you and your risk and reward ratio in your trade plan. There's plenty of market volatility in this market right now where day traders, you can be trading in any direction and doing just fine. As long as you have a plan and you're following price, it really shouldn't matter which direction you're trading in. It's more for you swing traders that you're going to have to pick a direction if you're going to swing trade this market, if you think we're more likely to get the bullish scenario or the bearish scenario. And I will warn you, if you did not get the low risk entries on the short trades, I definitely wouldn't be shorting down here at support where the bulls are looking to buy. So have a plan and follow it. As you can tell from the arrows, I think this is the time to be buying dips and accumulating near support and then looking for the push higher. But in the event that we continue to break down, you need to have a plan to manage risk accordingly. And then quickly, I want to look at Bitcoin because we are getting an important breakthrough here where yes, we were making lower highs and lower lows, but as of lately, you can see we're starting to break back above 84,000. And if we could get back above this 200 daily moving average and resistance at 87,000, this is going to start looking like Bitcoin hit a bottom and it's starting to reverse out of the hole. Now, we don't have enough price to say it's happened because we really need to get out above 87,000 and hold above it. And that level is about 87,500. So if this happens, this is going to look like risk on behavior in Bitcoin. And as you can tell down here at the volume, we are seeing that increase in volume that I like to see on Bitcoin when it gets a bull breakout, but we just need confirmation of the bull breakout, which will be that break and close above 87,500. If that happens, that is definitely going to look like risk on behavior, and that should carry over into other risk on assets as well. And at this point, I do think that would include the stock market. So pay attention to Bitcoin here. Even if you're not trading it, it should be a good indicator of risk on or risk off. And keep in mind, there is the possibility it does reject here because we are getting those lower highs and lower lows. It is possible Bitcoin is going lower because we haven't got the bull breakout. So don't just assume Bitcoin has to go higher here. We need confirmation of that bull breakout. If you want to come navigate this market and trade with me, the best way to do that is TSC Trade Alerts, where you get all of my buy and sell alerts for the exact percent allocations that I am taking for the TQQQ and the SQQQ. You can find out how to join by clicking on the link in the description of this video. And with all of this market volatility, now is a great time to be a trader. So thank you for watching, everybody. Now go crush this market.